Check out the move in Bitcoin today, up 6.5%, coming back to life, filling this gap back here from mid-August, trading just below 28,000. Today, I want to take a look at the major supply and demand zones that we've identified here. Based on the options market, we're actually going to be taking a look at the gamma exposure levels for Bitcoin. Total gamma is positive, indicating a positive skew in positioning in the options market for Bitcoin. Zero gamma is at 26,000, so obviously we're just below 28,000 right now. You can see that there's some big negative positioning here at the 25,000, 25,500 strikes on Bitcoin options. You can also see the 26,500 strike as well as the 30,000 strike has big option concentrations there. And so we've already moved into this target at the 26,500 strike level. And so the next largest target is sitting at 30,000. This data graph is just showing us all the option contracts across every expiration. But I just want to take a little bit of a deeper dive and see exactly when the bulk of these contracts here at 30,000 expire. We can go over to our 3D Gamma dashboard. And we can see here, the bulk of these contracts are sitting in the September 29th expiration, which is about 1 month from today. And what that's basically telling me is that the options market believes that there is a high probability that we could see a 10% move higher in Bitcoin into the next 30-day period. All this negative gamma down here at the 25,500 strike is going to roll off on September 1st, which is this Friday. And so that's going to remove a big negative drag on the market. We're already seeing a lot of those contracts being closed out, which was the impetus for part of the move higher that we saw today. And so you can see how these gamma levels oftentimes act like magnets as well as support and resistance levels. So you really got to analyze where is the market concentrated across various strikes as well as across various expiration dates. If you guys are interested in accessing our gamma exposure dashboard, I'll put a link down in the description below. You can check that out. We're running our gamma analysis across all the major indices, ETFs, as well as mega cap stocks, as well as the major cryptos. So definitely check that out. So just taking a look at our gamma levels here on our chart, you can see we've been trading at this zero gamma level here for a number of weeks, really kind of basing. And then until today, we had this big pop up. I believe the target is this G1 level, which is going to be met between now and September 29th. That is what the market is telling us that the concentration is. That would then most likely act as some sort of at least temporary resistance level. If the market overshoots this 30K level here in the next few weeks, that would trigger a sell signal, at least on a temporary basis, probably for a move back down below 30K. And so the way gamma exposure works is that we're basically measuring pain points in the market. If you think about it, every single option contract has a point in which its option price is accelerating faster and faster. So option contract pricing does not move in a linear fashion. There's a convex nature to the option pricing structure. And so gamma is measuring the point at which option prices accelerate. And so when we look at gamma exposure for a particular option contract, what we're really doing is measuring the point at which the option price is accelerating to either the upside or the downside. So if you think about it, as price moves towards these strikes, our gamma exposure model is telling us that all of these individuals who are short these call options here at the 26,500 and the 30,000 strike are having to make massive adjustments in order to protect themselves. They're either closing out their short calls or they're actually buying the underlying asset, in this case, buying Bitcoin. So if you look here, the total gamma is currently positive. That means that the positioning in the market is skewed to the upside. So all of these positive gamma concentrations are going to act as magnets as price moves towards each of these levels. Market participants and option dealers that are short these calls are having to adjust in order to protect themselves from losing more money. Those adjustments often create kind of like a feedback loop, drawing the price into those big gamma concentration levels. Same thing happens on the downside, but this has less of an impact when total gamma is positive. When total gamma is negative, these big negative concentrations come into play, and those levels will oftentimes act as a magnet on the downside. So if you guys are interested in accessing our gamma exposure dashboard, I'll put a link down in the description below. You can check that out. We're also offering a 7-day free trial to our community Discord. We discuss all of our gamma exposure analysis in the Discord. Definitely want to check that out if you get a chance. Come on in, say hi. We'd love to see you. Thanks so much for watching, everybody. I'll see you guys in the next video.